Welcome to the live trading webinar with myself, Giles Cochran, and Paul Sanders. Very good, glad to have Paul back today, who is feeling better.
Giles,
good morning,
hey.
Paul. Good to see you back.
Thank you. We've we've got a red line day, red letter day today. So we'll see how far this thing can keep going, but it's pretty incredible drop.
Yeah, we sure do. And if you're joining us, it's obviously this very hot CPI print. First opportunity potentially coming up against this 5-minute retest of the 60-30. So we're going to keep our eyes on that. We've got a few minutes before the close. So let's just look at what's happened quickly. We're operating very fast today because of the environment. Looking at the CPI print, folks, look, hotter across the board. Core in line with the high. Year on year in line with the high. Month on month exceeding the high. The year on year in line with the high. Hotter than expected. Clear opportunity. Expect bonds to sell off, yields to move higher, stocks to drop, euro dollar to fall, dollar yen upside. Yeah, exactly. Devan, lovely CPI release. Those of us who are taking advantage of that. Clear opportunity to short the S&P 500. Made some good profits on that. Now we're looking to continue to sell. Couple of fundamental worries to keep on our mind. 3 o'clock Powell speaking, right? But remember what he said yesterday. He's basically confirming the higher for longer stance. Is he going to contradict that after the hot CPI? Unlikely. Looking at the you got Bostich speaking and Waller speaking today as well. 10-year auction, but look at the reaction in short-term interest rate markets. Tell you everything you need to know. Look at that here. That higher for longer narrative. Only one rate cut now expected from the Fed this year, right? But much higher for longer is expected. Wall Street journalist Tim Reyes saying inflation was firm in January, no question about it, derailing the case for further recalibration rate cuts before mid-year. So that's just priced out the chance of a Fed rate cut this half of the year, according to Tim Reyes, and I think he's right. That makes complete sense. And looking at the core headline, everything hot. So just coming up to the 5-minute close, that means we have on the 5-minute chart a sell bias in the E-mini 500. We have here at the 60.27 trap buyers. So if we see a retracement back up to 27.28.75, that is suitable to short from. Stops can be placed the other side.
President Trump commenting
at
on the inflation
40.
report. He seems to be attributing it to Joe Biden's administration. He
So
says Biden
6.27.
inflation up. And remember, this is the January report, and he was inaugurated in the middle part of the month.
So any retracement up to that area is suitable for shorting.
It was a joint report, but he nevertheless says Biden inflation
right,
up.
60.27.
Just want to clarify, it's January data.
So look for retracement up to there is suitable for shorting. So here's that 60.27, 60.28. That is suitable as markets currently stand. 39, so it's about 10, 11 point stop. So make sure your risk is aligned. Okay, folks, we're here today with the rundown and Naja, yeah, short oil and the CPI. Oh yeah, nice, Naja, that's great. Okay, so the main event today was the inflation data out of the US that came in hot. That provided a short-term opportunity to sell the E-mini. You saw the headline came in well above expectations for the month-on-month, 0.5%, and above maximum expectations, and all the other metrics towards the high end. So that also impacted interest rate expectations, and you can see that now markets are only expecting the Fed to cut once this year, and the chances of them holding have increased, and the chances of any interest rate cuts this half of the year have reduced to very minimal chances. That's why we saw the E-mini move lower. So I took the sell on the actual data release, just a quick scout lower here and here, taking two opportunities as it was very highly likely to see the E-mini move lower. Then what I was looking to do was short whenever we saw these sort of buyers getting trapped. So buyers trapped there and tried to short on the micros. I'll show you that in a minute. Stopped out. Then saw a opportunity to potentially short here with those sellers, right? Trap those buyers. And I was looking for that to move lower.
Back to Chair Fed Powell says not clear that bigger reductions in Fed.
Right, that was stopped out, and then I had a third attempt with these, looking for these buyers to get trapped up here and then move it down to this level. Now I got that trade, so it was the third trade that worked out. And on top of that, I was scaling in to these trades. So let's just show you that. It's a little bit messy, but you'll see. So the first trade was just testing the waters there as I tried to sell against that level and stopped out as we were clearly moving higher. It was clearly wrong. Then happy to scale in because that interest rate, because that interest rate expectation were impacted so much, just happy to scale in, right? And scaled in those positions there across the day, looking for it to drift lower. And as it drifted lower, just for around break even, a small loss, just took them off because markets were clearly going in the wrong direction. The 5-minute trapped sellers up here, this was the first lot of trades I was talking about here with those buyers, right, getting trapped. That was the first one that was hit for a loss, and then these ones scaling in as it was moving in the right direction, buyers getting trapped here. So that's the first lot of buyers getting trapped on the majors. Doesn't look trapped on the micros, but they were trapped. So I entered the first position there and then scaled in as we moved lower. And then as we moved into the value area, the confirmed value area, over here, I've got the point of control down there. And as we couldn't get through lower, just time to take profit. So took profit down at these lows. So all in all, a profitable day, but not as profitable as it could have, should have been. And a little bit disappointing, like, for that reason. Horatio had a good point. And, we kept seeing, like, if you've gone the other way, sellers getting trapped, buy, sellers getting trapped, right? Buying. So it's one of those days, trade what you're seeing rather than what you want to see. And I think that is a good way of summarizing it because the delta was really positive from the US Open. There were opportunity both ways, actually. I think that probably is the lesson, if that cumulative delta keeps moving higher, particularly after this first opportunity here, but then a deeper pullback did work out. So sometimes not every trade is going to work out, and the day was still profitable, albeit not as profitable as we would have liked it to be. Okay, folks, that is the rundown for today. Horatio, yeah, thank you, Horatio. There are some plenty of good people out there. I don't have a class or a webinar where I teach them, but I'm happy to keep. I'm sort of sharing bits and bobs each time we're here. So hopefully over time you'll just pick it up. And as you can see on a day like this, it's frustrating, right? Because fundamentally that's clearly higher interest rates, higher for longer. Prices can be moving lower. They should be. We've got the macro fundamental course on the Financial Source website. That's very good. Arno Venter did that, and he's excellent. He really is an excellent analyst. Oh yeah, that's a really good course, Naja. Right, excellent course. If you doing that course and then coming along to me and asking me your question, that would not be bad. Yeah, write a book. Yeah, the risk event course is good as well. To look for. Okay, so let's see what we're doing here. Yeah, no, Konstantinos isn't, but the course is still here, so the course is excellent. I know he moved to Australia as his family were making a move, and he was in South Africa, and I know it's quite difficult for him. If you remember, he constantly had problem with power cuts, and he had to have this big diesel generator just to get his work done. So it was very difficult for him. Poor chap. All right, that's interesting here. 15-minute sellers trapped, pushing high up to that 60-70. Look at that. That delta. We were right to see this here, this absorption. Sort of the passive sellers were coming in, right? But the buyers were just buying them up. That was the right thing to go wrong, as you pointed out, Horatio. And I was happy to go long from there to there. Just didn't get the pullback. Here you can see that's the move there. Oh, there we go. We're having a run at that, aren't we? Trying to flush those guys out. I'd say the lesson that we've learned from 53 though, yeah, I know that was the one, wasn't it? Yeah, I was trying to get in at that 50. All right, here we go. Interesting to see what's going on here. I think going on, there's still two opportunities here in this market that there is. And watch out for it. And I wouldn't mind selling from higher prices if you see 5-minute or 15-minute guys getting trapped up here. I have no problem with going with that. Just like manage the risk. Kind of, it's one of those tricky days. You just, you know what I mean? You've got to manage that risk. Okay, so that's a 5-minute break. I'm not going to be buying up into that because it's sort of that top of that range. Yeah, just going to leave that there for now, even though we've trapped those sellers there. All right, folks, I'm going to call it a day from there. I hope you have a good rest of your day. And we'll be back tomorrow, folks. Take care, everyone. Look after yourselves, folks. Bye for now.